It's been a while that I made a video on my stocks trading. Here's my last 3 months performance is basically a flat performance here. What I've been trying to do was do a bit of risk management, and because of that, you will not see anything going up or down. It's basically flat here. So, and the reason for that is even though I have a strategy where I go with the poor man's call strategy where covered call strategy where buy a leap and then sell covered calls. Whenever it downturns, I didn't have a strategy to actually exit, and that considerably drew down my account. And to prove that and to show that what's happened, seen here, this was my account like in February at 84,000, and because I didn't have any kind of exit strategy or risk management, so it went down to 38, 39, which is more than 50% of my account drawdown. Now, from that point, all I was concentrating on is having a good risk management, so it's relatively flat. And now I think since I have a grip on my risk management, I need to start building my portfolio once again. Now, how am I doing this risk management? So basically what I tried to do was, let's go with my current positions in here and take anything in here, let's say a firm, right? So this line is the 3-day high and this line is a 3-day low. Now you can see there are multiple bars in here because each one of them are like 110 minutes, which is basically 4 bars is 1 day, right? If you see in here, this bar is September 17th, and it's still September 17th at 3 p.m. So, and these lines are generated through a script. So I can take a look at it and say, and put a line at the lower half of it, or lower part of it. If my position drops below this and still above my 21-day moving average, which is basically a 34-day exponential moving average, I would flag it as orange. And if it crosses below my orange line in here, that's my red, and I need to take a decision whether to keep it or not, or cut it. Right. So basically that's my risk management. 3 days might seem very tight, but I still have this place to actually take a look at it and see if I want to hold it, right? So maybe I'm looking at BJ or Costco, so which is kind of crossed the my red line. Now this 3-day has been redrawn based on the past 3 days, but my red line, when it was at the highest point, I keep that pin there, do not move it until this redrawn line goes above, and then I push it up. So it looks like it has reached the red line, but it's not able to breach the orange line in here, so it's still an open position for me. Now one other thing that I wanted to do was not to carry through any positions during earnings. So earnings in 5 days, I need to drop this off in the next couple of days of market days. So maybe one day or Tuesday, I'll drop this out. So that has been my risk strategy in here of getting out of the positions. Now with that in place, I wanted to have a good strategy to get in. And what I found was the best time to get in is right after the earnings, right? So here earnings happen, and it did a huge pop-up, right? So it's popped, and this is the highest point it reached at some point, and then it went sideways, right? So sideways, now again it's coming up and breached my red line in here. So typically this would be, I would mark it as green so that it's a point of entry for me. So in the last trading day, it popped out of that of line and came back in, but this is the whole market was down a little bit, so this is a good one for me to get in, right? So that is what I'm looking for as entry point. So a huge pop-up right after earnings, and if it consolidates sideways or if it continues to go up upward after 2 or 3 days after the earnings is announced, then I would buy it. Now in this case it went sideways, now popping up above the line that I had drawn, so it would be a good buy. Let's take a look at this one. Huge pop-up going sideways, still not able to break this point in here. It might go down, up. If it goes below this orange line, then it's a no-go. But if it goes above, yeah. So same with my Dick's Sporting Goods, huge pop-up, allowed it to fall, bounced off this orange line here, but my red line is up in here, right? So I don't know if it has enough to bounce back to this line and go above. Maybe this is a no-go as well. Looking at Workday, similar story, and Lulu looks strong, right? So huge pop-up. So this is a good one. Pop-up and going sideways, even after a very weak market day of Friday. This might be a strong candidate for a buy. So I'm going to have a close watch on Lulu and Low to see if I can enter on these two positions next week. And we'll see after that how it goes, right? So again, we have the 3-day strategy and lines in there. If I make an entry, it falls below that or the orange line, then cut your losses and get out. But if it stays above and goes sideways and grinds its way up, that would be a good win. The reason that I picked the earnings day is once the earnings are announced and there's a huge pop-up and goes sideways, it typically keeps on grinding higher for the entire quarter. So regardless of how many days I spend in here or wait, this is September 9th, right? So today is September 18th. Even if I get in at around September end or October 1st week, I still have 2 more months to see it grind up until the next quarterly results are announced. So it's possible that it would keep on moving, something like this, right? And if it keeps on moving like this, then cash on it. But if it drops below this orange line in here, it drops. Even though this chart is 4-hour chart, and this chart is a 2-hour chart, I have kind of drawn these orange lines similar in both the charts in here. So if you can see in here, this point marks around the same point in there, right? So regardless, I see my averaged zero lag moving average hitting this line or see the bars hitting this line, I would get out at that point. So that's my strategy going ahead. Let's see how it works. And I'll not be doing more frequent videos. If I do an entry this week, maybe I'll do an video next weekend. Until then, take care. Bye.